Hello guys and welcome to the video. My name is Brandon and today we're going to be talking about the top 3 Chinese stocks. Now before we get too deep into this video guys, I just want to say this is strictly my opinion. These are my thoughts at the moment. I'm creating this video for entertainment and educational purposes, just so you guys can see what I'm thinking and kind of incorporate that into your own research. And always be sure to speak to some sort of professional or some sort of advisor before you make any big financial decisions for yourself. So let's get right into the first stock for this video, and we can't talk about the Chinese market without of course talking about Alibaba. Now, Alibaba is the enormous and successful e-commerce giant. A lot of people like to make the comparison that it's like the Amazon of China. The ticker here that you guys would be looking at is BABA. It trades on the New York Stock Exchange, which is great. And the company you're actually buying is the parent. It's the holding company, right? It's the Alibaba Group Holding Limited. And this is basically a network of primarily Chinese e-commerce companies. But as we'll see in a second, they're also involved in the cloud computing space, media and entertainment, payment transactions. The company is more or less evolving into what we would call a conglomerate, and it's kind of what we're seeing a lot of these big tech giants do. But the e-commerce side of its business makes up 88% of its revenues, so this would definitely be considered the core of Alibaba's business. Now, Alibaba.com is of course their original and probably most well-known platform or website. It is the global leader in online wholesale. So if you're looking to buy in bulk and make a large quantity order, like hey, I need a bunch of chairs, I need a bunch of this, you likely be using Alibaba. So this is a very important and primarily used by suppliers and big manufacturers. Another company under the Alibaba umbrella is AliExpress. If you're into drop shipping, I'm sure you know this like the back of your hand. It's a very similar website, but it's catered more towards the retail buyer. So you can buy smaller amounts, like one item. And then another big component that needs to be mentioned as part of this big umbrella of companies is the Chinese online marketplace Taobao and Tmall. And I apologize if I totally butchered that. So Taobao is a extremely popular platform or website over in China. Almost everybody there apparently uses it. They have a very wide range of products. They focus on what they like to call C2C shopping or consuming, which is basically consumer to consumer. So I like to think of it kind of similar to eBay, where I can sell you a product or you can sell me a product. And then they have this other division or spinoff called Tmall, which is their B2C platform, where businesses are selling to consumers. So clearly, very diversified and very dominant in the kind of e-commerce space over in China. And just how dominant, you may ask? Well, as of December, the company reported about 515 million active buyers, using the Alibaba platforms. That's over 1/3 of the total Chinese population. I can read a little clip here from a Morningstar report. Based on several online shopping surveys, we believe that more than 2/3 of the China consumers consider Taobao or Tmall as their most frequently used online marketplace. So clearly, like I said, this is their go-to option when it comes to Chinese online shopping. Now, Alibaba stock over the past year is up about 80%, so awesome performance there. The company does not pay a dividend, so if you are looking to invest in this company, really the question you have to ask yourself is, are they going to be able to continue this great, growth path that they're on? Based on some of the numbers that I've been seeing, based on some of the research analyst reports that I've been reading, I'd have to say yes, absolutely, I think they can. Over the past year, the company has grown by 56%. And from the analyst reports that I'm reading, they're expecting those numbers for the most part to continue. I mean, maybe not at 56%. That's that's outstanding for such a big company, but to continue at a good pace, largely in part here to the booming Chinese economy. China's GDP is growing at 6.9%, and that's in comparison to the United States, which is around that 2% range. The rise of the middle class. There's a lot of spending coming out of the Chinese middle class, and then of course, we have this whole ongoing shift to online shopping. So all very positive trends that work in Alibaba's favor. On top of that, another bright spot that I want to point out with Alibaba that a lot of people overlook is the growth of their cloud business. So this portion of their business only makes up 4% of their total revenue, so still a very small component of their business or their revenues. However, it is up 104% year over year. This is a clip here showing the growth of their cloud business dating back to 2013. So a really healthy trend, and there's definitely tons of room to grow. In fact, management actually put out a statement a little while back saying that they believe Ali Cloud can eventually be as profitable as Amazon Web Services, which we all know how successful that has been. Aside from that, they're also the lead player in the payment processing field. So a lot of transactions go through them with their system called Alipay. Clearly a really big company, and they're continuing to grow and expand. So we can ask the question here, is it too late to invest in Alibaba stock? Yeah, it's trading at all-time highs, and in an ideal scenario, we'd see some sort of pullback or correction, either with Alibaba itself or even more of a macro market downturn. But no, I don't think it's too late to invest in Alibaba stock at all. In my opinion, Alibaba has clearly earned the top spot when it comes to Chinese e-commerce, and they're not only limited to China. In fact, they have plans to expand globally. A good example of this is their acquisition of the company Lazada. So this is a Southeast Asian e-commerce platform. That's just one example, right? They plan to expand, and that's just their e-commerce aspect of the business. They still have other areas like their cloud business, for example, which will continue to grow as well. Not to mention, of course, having Jack Ma as part of your leadership, that's definitely a positive. He's very highly respected in the investment industry. The company's growing very well, and 10 to 15 years out or longer, I see Alibaba being a good investment. Moving on to the second stock for this video. If you don't know this company, man, you better listen up because it actually just passed Facebook in terms of market cap, sitting at about $570 billion. This company is sneakily becoming a force to be reckoned with. If there's one Chinese stock that I think has the ability to seriously blow up and kind of expand globally, it's this one. I own this stock. It's Tencent Holdings, ticker TCEHY. So Tencent is China's largest internet service provider, and they're probably most well known for their social network platforms like WeChat and QQ, but as well, they're a huge player in the online gaming industry. And those are their primary aspects of their business, but as we'll see in a second, they're really involved pretty much all across China, man. They have a huge reach towards the Chinese consumers, and they have a very, very wide range of services that they provide. So let's talk quickly here about the different segments of their business. Their social network platforms consist primarily of the messaging app WeChat, and then the instant messaging platform QQ. All right. Now, as of their last report, they reported about 963 million active monthly users using WeChat. So clearly well adopted in China. As of August of 2017, the WeChat app was the third highest ranked app when it came to monthly active users in the world. All right, that's not even just in China. And just a little background here. WeChat is basically the equivalent of WhatsApp, right? It's their day-to-day mobile messaging app. But over the years, it's really turned into more or less a platform rather than an app. One example here, and one of the most important and growing aspects of the company, is their payment processing system, like WePay. Basically, what you do is you link up your credit card to the app, and you can go, purchase things. It's basically a mobile wallet. In fact, I didn't mention it in the last segment talking about Alibaba, but one of the criticisms there was that their payment system, Alipay, which is the leader in the in terms of market space, it's actually being threatened by the competition, in particular Tencent's payment system. So Tencent's payment system is really on the up and coming. I believe it represents something like 37% of the market share, and it's really posing a threat towards Alibaba. QQ, like I said, is their instant messaging platform. So it's primarily a PC or now mobile platform. It's this little penguin guy that maybe you've seen before, and I like to think of this as like MSN on steroids. In fact, to the best of my knowledge, this was actually the first real instant messaging platform in China, and to this day, it's still widely used, and it's evolved. You can play games and whatnot through this platform. Now, aside from these two platforms, what a lot of people don't realize realize is that Tencent is the leader in a lot of different segments, a lot of different outlets. So clearly, through the use of their social network, they've been able to get involved in many different spaces and really affecting the daily lives of the Chinese consumers. For example, media outlets, news, video, music streaming. And not only is Tencent involved, but in most cases, they're the number one option. So a super positive sign when you think about the reach that they have on the Chinese consumer. Now, aside from their social platforms, which is a huge aspect of their business, majority of the company's revenues actually comes from the online or the video gaming division. They're a huge player in not only PC and online gaming, but in mobile gaming as well. In 2017, I believe 3 of the top 5 mobile app games distributed by Tencent. In 2016, about 25% of the top 100 mobile games distributed by Tencent. Their strategy when it comes to gaming is pretty much just either acquire these companies straight out, or get involved by taking a minority stake or whatever way they have to. But with all the major games, if you dig deep enough, it seems like Tencent is involved in some way, shape, or form. For example, Riot Games, one of their subsidiaries, and they of course make the very popular and very successful League of Legends. They own a minority stake in Epic Games, which is the developer of Gears of War, Infinity Blade, Fortnite. They're involved with PUBG, which is one of my personal favorite games. They're involved with Activision Blizzard, which of course, Activision Blizzard, man, World of Warcraft, Call of Duty, Overwatch. I could continue going on with this list. Smite, Clash of Clans. The list would go on forever. And for your interest's sake, I would actually highly recommend just go online and just see the list of all the companies that all the apps or games, that they're involved with. It's an outstanding list, and I mean it. They are a serious force to be reckoned with. As I've mentioned in previous videos, I'm a big fan of the esports, online gaming space. I think that it is a great field to be in. I think that it's going to continue to grow at a pretty rapid pace. However, I can read a little note here by management saying that they do expect their PC game revenue growth to decelerate in future periods. So looking at a 1-year number here, the stock is up 110%, and that may sound insane. It is insane, but it's not surprising when you're seeing this company growing its revenues at 61% year over year. And let's not forget here that this is a $500 billion market cap company. So for a company that's this big to be growing at this fast of a clip, that's definitely one that you should be keeping on your radar. Now, where do these revenues come from? Well, very simply, Tencent just monetizes its online platforms, its networks, things like fees, subscriptions for its music and video platforms, in-game purchases like skins and virtual purchases, big part of the company, and then of course just online ads, right? Ad revenue. Now, do I expect that Tencent will continue to grow at 61% year over year? Likely not. Those numbers are very good. However, I do expect the company to continue growing at a very, very respectable pace because of how large it is and because of the reach it has to its consumers. And let me explain what I mean by that. Because Tencent is so big, and because in many cases it's really the first choice of consumption when it comes to the average Chinese consumer. What we're seeing is that they're leveraging their size, and they're striking deals with content creators like the NBA, HBO, EA Sports. These foreign content creators, like over here in North America, when they want to go get their content over to Asia, naturally Tencent is the first person they come to because of their distribution network. Another great example, a notable one to point out, is the alliance that they formed with JD.com. And JD.com, of course, is another very popular Chinese e-commerce stock that a lot of people are asking about. But essentially what they did was, they combined forces to compete with Amazon. And that just goes to show, the power and the size of Tencent. Because they're so large, these type of opportunities arise. And with this particular example with JD, it seems like a perfect alliance. You have a very specialized, very successful, very highly respected e-commerce company linking up with the big giant in Tencent. So perfect mesh, and they complement each other very well. So to summarize, from a strictly fundamental standpoint, I think that the company is in an awesome position to profit. I think that they're in all the right industries, and they're clearly continuing with their growth path. Their free cash flow continues to increase, which of course is a positive when you have a company like Tencent who is constantly acquiring and adding companies under their umbrella. Like I mentioned, I think at the end of the day, what it comes down to is adoption, and Tencent has already established itself as the trusted go-to company, the go-to network, and because of that, I think that they have the capability and the power to leverage that and potentially be a global monster. Moving on to the third and final stock for this video, and I had a bit of difficulty deciding which one to talk about because there are so many great choices, man. Like I just mentioned, JD is another very popular stock. I own the stock Baozun, BZUN. But I had to stay true to the BAT acronym. So the third stock that we're going to be talking about today is Baidu. Ticker here is BIDU. It trades on the NASDAQ. The company does not pay a dividend. And very similarly to how Alibaba gets the comparison to Amazon, well, Baidu is pretty much the Google of China. So Baidu is China's largest search engine. It controls about 80% of China's search engine revenues, seeing how, of course, Google is banned in China. So this right here is the leader when it comes to that. Now, pretty much like every other tech giant out there, it has gradually extended out of its niche. Not only is it a search engine, but it also offers services like Baidu Maps, Baidu Video, Baidu News. And of course, like every other company, it offers its own cloud service. It's essentially, China's information plug. As well, they are very heavily invested in AI, so artificial intelligence, things like I mentioned cloud computing, voice recognition, facial recognition, self-driving cars. Previously, they've had a lot of money invested in this self-driving car space. They had a prior partnership with BMW. But basically what Baidu does is they provide the consumer with information and they generate revenue off of ads. In fact, 86% of the company's revenues come from online ads. As of their Q4 earnings report, they have about 460,000 active advertisers on their platform. And the system they kind of go by is what they want to call, a pay per performance or pay per click system. It's very similar to an auction where the different advertisers will essentially bid, and the higher the bid, the higher priority their content will be seen. We can have a look here at the performance for this stock. I'm looking at a 5-year number. Very interesting growth pattern, right? This company has definitely been growing, but if we focus in here on 2016, for anyone who's been following this stock, you'd know that Baidu, they ran into a little bit of an incident. So I believe they're calling this the Wei Zexi incident. And basically, apparently what happened was, back in 2016, there was a 21-year-old kid, college kid, who I guess had a form of cancer. And what happened was he apparently tried, a very unique, a very expensive type of treatment, which he found off of Baidu's search engine. Turns out, a little while goes by, the treatment ends up failing, the family ends up spending a bunch of money, and right before this 21-year-old dies, he comes out publicly and accuses Baidu of promoting a bunch of false medical information. Apparently, it was promising an extremely high success rate. So after all that, the company Baidu went under investigation. And of course, as a company, you never want to have that kind of news circulating around. All it does is bring a negative vibe to the integrity of the company. You can think about all the legal fees that they had to incur, and of course the stock price was affected. So definitely 2016 was a bit of an interesting year for Baidu. At the end of the day, you got to ask yourself, does an incident like this really affect the longevity, the long-term performance of this company, of the stock? Probably not. Like I said, it's terrible news. But at the end of the day, this company, things will die down and the company will continue to generate, ad revenue from their search engine, and they'll continue to develop the AI part of their business. So in my opinion, the worst of it is behind them. Now, Baidu is actually my least favorite of the 3 stocks that we looked at today. Again, it is substantially smaller with a market cap of about $91 billion in comparison to Tencent and Alibaba's $500 billion. Looking at their year-over-year revenues, the company is growing at a good clip, but again, we do see the discrepancy here in 2016. And in my opinion, I'd expect this trend of growth to continue because of how, clear cut of a leader they are in the search engine space. The trend of needing to find information is not going to change anytime soon. With Alibaba and Tencent, there's always the risk of, new companies coming in and, swooping up some of their market share. But like I said, with Baidu, they already control 80% of search engine revenues. So to me, that's a pretty big cushion, and there's a pretty big barrier to entry for any new companies that want to get into this space. Now, one of the downsides when it comes to Baidu is that they kind of missed the boat when it comes to the mobile shift, right? We look at Google, for example, which is a comparable platform, but they are a huge player in the mobile space with their Pixel and obviously the apps. I mean, that's a huge component of their business. Baidu is primarily a search engine. Now, in my opinion, where the value lies in this company is their potential for AI development. One of the big positives with Baidu is that they have a very healthy balance sheet. They don't have a whole bunch of debt, and most importantly, they're sitting on a pile of cash. They have over $100 billion in CNY, Chinese yuan, sitting in cash, ready to invest in, new technologies, new opportunities that come their way. And an example, one of the big things on their agenda is to continue experimenting with self-driving cars, and having that much of a cushion, having that deep of pockets is a huge benefit. They can definitely capitalize on some opportunities. So clearly they are a very successful search engine, and I would expect that to continue going forward. But the question then becomes, how well are they going to develop the AI aspect of their business? If you think that they are, and again, they do have the pockets for it, I think that this could be a great investment. So guys, those are my 3 Chinese stocks for this video. Basically just went with the BAT stocks, Baidu, Alibaba, and Tencent. Like I said, man, my personal favorite, my personal opinion, I think Tencent has the best potential to go, worldwide and become a beast. But man, as always, there's so many variables that you have to factor in. So much competition in the tech space, the Chinese economy, politics, all of that comes into play. But at the end of the day, based on my research, based on my thoughts, I think that these are all, solid investments for the long term. So guys, as always, thank you for watching the video. I hope you guys enjoyed. If you did, you can give it a thumbs up. Let me know in the comments below. And if you're not subscribed, subscribe to my YouTube channel. I post a video every Monday on, investing, finance, the stock market. And if you're already subscribed, thank you for watching. And before I see you guys in the next video, I'll announce the winner of the giveaway right now. All right, guys, we are here ready to pick the winner of the subscriber giveaway. We're gonna get out of there. Thank you all for participating. If you left a comment, you are eligible for this. Just a random comment picker. I have the video URL inputted here. So good luck to everybody, and thank you for supporting the channel. The winner of the $50 giveaway goes to Ryan Plays FIFA. Hey man, I'm Ryan from Toronto, Wheaton North. Oh man, I did not pick this, but this guy deserves to win if he is a Raptors supporter. I was your 100th subscriber. I couldn't believe that is awesome, man. Ryan, I absolutely congratulations, and thank you for following the channel. Thank you to everybody that participated, and I will be getting in contact with you within the next 48 hours. Just keep an eye out for the email, man. I'm really glad that you participated and won this. I thank you for your ongoing support, and thank you to everybody for participating. And again, thank you guys for watching the video. Good luck next time for the next giveaway. Stay tuned, and thank you guys for watching, and I will see you in the next video. Congratulations, Ryan Plays FIFA.